Morning, guys. It's Monday, June 30th, 5:26 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 1 3/4 at 425 1/4. November soybeans up 3 1/4 at 1028. December Chicago wheat down 2 at 561. December Kansas City wheat down 1 3/4 at 555. September spring wheat down 5 cents at 623. Mackenzie, excellent job holding the fort down last week.
Thank you. We kept things afloat.
Thank you to Ryan Moe for filling in for me. I didn't pay much attention to the markets, and it's a good thing that I didn't because I would have drowned myself in the ocean if I watched the corn market every single day last week. Let's get to Friday's price action.
So corn and soybean futures rebounded from multi-month lows on Friday after hitting a 6-month low earlier in the week. The December 25 corn contract rose 6 cents to close at $4.27 per bushel. The November 25 soybean contract gained approximately 8 cents to settle near $10.25 per bushel. Market sentiment improved on news of progress in U.S.-China trade negotiations and was also supported by gains in the financial markets and further weakness in the U.S. dollar.
We've got a big report today at 11 a.m. Central Time. We'll get to that in a minute. So you had what I would call your big pre-report flush out. All the week longs flushed out of the market, a lot of probably strong length flushed out of the market. And now you're kind of sitting here waiting on the report. The markets act incredibly poorly. I think a lot of it has to do with weather, and we'll get to weather here in a second, but just generally negative sentiment. And there's a lot of positive-ish things here. Like you mentioned the dollar, and we're going to get to the dollar later and how it's been very weak. I see some weather stuff that's maybe, I'm not going to say threatening, but could be friendly-ish here this morning. You've got the old story about the tight corn situation. None of it seems to matter. Nobody seems to care. It's just like the funds and whoever else is just convinced that we've got big crops coming and that the weather has been favorable. So let's go to weather.
The U.S. Corn Belt will see minimal rainfall over the next week. The 7-day government forecast calls for only scattered rain throughout some areas of the region. Illinois, southern Iowa, and Indiana are slated to be especially dry. Based on Euro model data, our friends at Crop Profit estimate that U.S. corn areas will run 2.9 degrees above normal on average over the next 7 days. Despite the heat and reduced rainfall, the markets are disinterested. Both the Euro and GFS models introduce more widespread rainfall during the 5 to 10 day period, although some areas may remain dry. It should be noted, however, that most U.S. corn areas saw above normal rainfall over the last 2 weeks.
So yeah, that's, I think, the bearish or negative issue right now is that over the last 2 weeks, U.S. corn areas weighted by production have seen 137% of their normal rainfall. So you've had substantial rainfall over the last 2 weeks. Now the forecast in itself in a vacuum for the next week, I would call this a friendly to maybe even bullish forecast on June 30th. The market doesn't seem interested, though. I mean, you've got generally dry conditions for at least 5 days. And yeah, maybe the rains come back during the 5 to 10 as forecasted. But even during that period, you've got a lot of the central corn belt that should stay dry. And the temperatures, I mean, 2.9 degrees above normal on average for corn areas over the next 7 days. And then the 8 to 14, you're still like 1 degree above normal. And maybe that 1 or 2 degrees isn't the end all be all. But I feel like in a normal year, the markets would react to this and you would see, I mean, December corn's trading lower this morning on a hot and dry forecast on June 30th, which is very odd. Maybe we've just got to get through the report. Maybe we've got to get through the report and hopefully it isn't super bearish. I think a lot of bearishness has been priced in and then maybe we get back to trading weather. I don't think this is an ideal forecast on June 30th. I know we're lacking some heat in some areas and that it may not be a terrible thing, but the lack of rainfall, if realized, could turn into a problematic deal very quickly.
The funds increased their net short position in the corn market last week. During the week ending Tuesday, June 24th, large money managers were net sellers of 6,000 corn contracts. Since mid-April, the funds have sold 321,000 corn contracts. The funds were also net sellers of 27,000 soybean contracts and net buyers of 10,000 contracts of SRW wheat on the week.
As I think Ryan mentioned last week, the position that the funds hold in the corn market, this is no longer an agnostic position. This is the funds holding a fairly aggressive net short position. They're negative the market. The sentiment here is very negative and has shifted that way. The amount of selling that has occurred among large money managers over the last few months is pretty incredible. I mean, they were damn near record long not that long ago, back in January, February, and now they're holding an aggressive net short. It turned very, very quickly. Premium subs, you guys have the full versions of the fund tracker charts in your email this morning.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our videos from last week?
Ryan was on and had a bunch of great guests, which was cool because I have my typical rotating guests who I love to death, but it's nice to have a change of pace every now and then. And Ryan did U.S.-Mexico relations. He did the latest on China. He did helping build on-farm generational value. Also talked about a summer push, end of summer push with regard to ethanol and processors and that sort of thing. Today, I'll be doing a USDA snapshot video. It'll be out within usually 10 minutes of the release, maybe 15, depending on if USDA is on time with its report release, which is a big question mark. If you guys want to see the premium stuff, we send out tons of content to our premium subscribers every single business day. Our morning email goes out at 5 a.m. Central Time every day. Our 10 a.m. Email blast is our premium video for that day. All of my cash grain marketing recommendations are included. I had some stuff on wheat and soybeans a couple weeks ago that you might want to check out. If you're looking for a simpler approach to cash grain marketing, you may want to check out what we're doing here. Super easy to follow stuff. Go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys.
USDA will release its planted acreage and quarterly grain stocks report here this morning at 11 Central Time. Traders expect that planted U.S. corn acreage will rise slightly compared to March intentions. A slight increase is also expected in U.S. soybean acreage compared to March. June 1st stocks of corn are forecast to decline by about 7% compared to last year, while soybeans are projected to rise 1% year over year, reaching a 5-year high for the date. Wheat stocks are expected to increase 20% versus last year, reaching a 4-year high.
Of all the numbers that USDA puts out, the acreage numbers are by far the most unpredictable. People put out their estimates, but if you get the number right today, it's just luck. It's not because you're smart. Nobody has ever had any luck consistently over the years guessing the acreage numbers. I know that there have been surveys out there and different people are trying to survey farmers and all that sort of stuff and try to gather numbers. It's a wild guess. Nobody has a clue. And this has the potential to result in a significant degree of volatility. I'm curious to see what the corn stock situation is or was as of June 1st. The average trade guess would indicate that it's substantially tighter than it was a year ago. Yet you look at the markets and you would think the contrary. So I'll be curious to see if there's something in the stocks numbers that we just don't know. This report could be a big market mover. It very often is. It will be out at 11 a.m. Central Time today.
The harvest of Brazil's second corn crop remains well behind last year's pace. According to Patria Agronegocios, approximately 19.5% of the crop has been harvested, down substantially from 47% during the same week last year. Progress has been hampered by late season rainfall in April and May, which left the crop with high moisture levels. As a result, many farmers have reduced their harvest pace while waiting for field conditions to improve. Despite the delay, this year's safrinha crop is projected to reach a record 103.2 million metric tons.
I keep getting emails from people and they keep asking me about how the U.S. has lost its crown as the top corn exporter, and that is not factual. The U.S. is still the world's largest corn exporter. There was one year, it was, I believe, the 22-23 marketing year, that Brazil exported more corn than the United States because things got really tight here in the U.S. But aside from that, the U.S. is still the biggest corn exporter. Now, Brazil is going to be pretty competitive here, although I know you guys ran a story last week about biofuel mandates in Brazil and how they're going to use more corn for ethanol, which is a big positive. It means less of their corn goes on the world market, but still they're going to have a pretty damn competitive export program here for another, call it 4 months.
The S&P 500 closed at a new all-time high on Friday. The benchmark index climbed 0.5% to close near 6,173 points, slightly above its level when President Trump took office. The Nasdaq also gained 0.5%, setting a new record, while the Dow Jones advanced 1% on the day. Equity markets have experienced significant volatility this year, largely in response to Trump's trade policies. However, investors appear to be adjusting to the pattern that his tariff rhetoric is often more aggressive than the policies he ultimately implements. Market sentiment has also been supported in recent weeks by signals from Federal Reserve officials indicating a potential openness to cutting interest rates.
I'll tell you guys a story. So our friend Jim Urio does Macro Friday with us every 2 weeks. Jim is super sharp dude. He's a professional interest rate trader in Chicago. And when the Liberation Day low happened in the S&P 500, which is early April, the stock market fell on its face because people were scared of tariffs. There was a lot of buying and selling going on and it was divided by political affiliation. So Jim had talked to some of his friends who were financial advisors, and this is retail money, which isn't necessarily like the big driver of prices, but it gives you kind of a read on how silly this all is. So people, if you were what I caught from Jim was this: if you're on the left, you were selling stocks in April because you thought Trump was going to ruin the country. And if you're on the right, you were buying stocks in April when they were down because you thought Trump was going to save the country. And it turns out if you were on the right, you were right. You were correct because now you're looking very, very smart as the market makes all-time highs. But the stock market really should not be political. It shouldn't be. I mean, the market typically trends higher over time under any president, both parties. But I don't necessarily like that that's the way that people are looking at this, because it's not the correct way to look at it. But in any case, yeah, I mean, we've made some trade progress. There's still a lot of things that are kind of on the, I guess, going on, but it's not nearly as bad as what people thought. And the economy appears to be in good shape. I threw in a dollar chart, and I told you guys the market doesn't seem to care about the weather and the threatening forecast. Market doesn't care about this either. We posted fresh lows in the dollar index overnight, lowest trade since February of 2022. Yet we just can't seem to get a reaction in these commodity markets, which is not great.
USDA reported a flash sale of soybeans on Friday. U.S. exporters sold 4 million bushels of beans to Mexico for delivery during the current marketing year. Accumulated soybean sales for the current marketing year are up 11% compared to the same period last year.
That's great. What we need to see is new crop bean sales to China. And admittedly, I was on vacation. I did not look at the export sales report last week, but I believe that China still has nothing on the books with regard to new crop U.S. soybean purchases. And that's something that we're going to need to start to see pretty soon. What did cattle do on Friday?
Cattle futures had a big day on Friday. Live cattle were $1.45 to $4.10 higher. Feeders saw gains ranging from $3.20 all the way up to $4.60. Cash cattle trade was lower for a second consecutive week last week. In the Southern Plains, cattle were $3 to $5 lower compared to the prior week at $2.23 to $2.25. Up here in Nebraska, cattle were $5 to $7 lower at $2.30. And then over in the Western Corn Belt, cattle were $3 to $6 lower at $2.30 to $2.33.
Stock market's higher again this morning. The Dow Jones up 216. The S&P's up 27 points. Bonds are up just a little bit. U.S. dollar is lower again. Crude oil down 8 cents in the August WTI at 65.44. Have a great day, guys. Remember, report at 11. We'll be back on Tuesday.